Usual disclaimer, because we're going to be showing actual trades and results in numbers, and it's always important whether you trade futures, forex, stock, options. You guys always know, I believe you do, that there's risk associated with trading, and obviously, you need to assess your personal situation. So when we make a suggestion on, if you risk this percent on this size account, this is what you can trade. You're going to have different comfort levels. Some of you are going to be more aggressive, and some of you are going to be more conservative. And you should always view your investment in active trading as risk capital. I mean, that's always kind of the key, right? Never spend the mortgage money is sort of the short story we could probably put on here. Never spend the mortgage money. So definitely thanks for attending. We already talked about, we'll be talking about small account trading, how to launch your trading business now. We're going to show you using the PTU trading strategies, some of the ideal markets for these accounts, and then we'll show you how you can get started if you choose to be immediately active in the Premier Trader University and learn the exact systems that we're sharing with you today and actually trade the exact markets that we're going to demonstrate for you today. So without spending a lot of time in this, I know a lot of you are very familiar with us. We've been around for 17 years. Some of you aren't as familiar with us. That's me, Mark Silverman, top left. Brian in the bottom right there is going to be answering your questions in the text. So ask those anytime you have them, and we'll do Q&A at the end as well, but we'll answer as we go here. And we have customers, like I mentioned, in 105 different countries. Troy Noonan gets the middle Hollywood square there, so he's going to be talking with you as well on the webinar, and then some of the other team that helps us support the PTU and our educational programs here. The neat thing about this group is that everybody was originally a customer of the business, took a course, enrolled in the school, etc., and works with us now. So that's kind of neat. It puts us in a pretty cool position to actually be trading in the markets every day and also know exactly what you guys are experiencing in that road to profitability. So this is one of the formulas we always like to kind of, in a way, start out with. I always like to emphasize, and especially when we're talking today about small accounts, success starts with just one market, one contract, one trade. Too many people approach this trying to get rich quick, feeling that they need to make all the money in a week or a month. And if you can just kind of set all that aside and realize I only need one good market, one contract, or whatever you want to call it, position size at a time, and just one trade at a time. That's all it takes. So if you can master that, you just need to have a great system and great training, and you can definitely follow a very easy formula. One market, one contract, one trade. You always want to make sure when you trade you have exact entries, targets, and stops. Very essential to be able to follow any good trade plan or any system. You got to have stellar, perfect risk management. You need to know in advance how badly that trade can hurt you, and of course also what it's going to make you, so you can determine when you can eventually scale and start adding to your position sizes. You have to be able to handle the order management, because it's one thing to have a trade set up on the chart. It's another thing to actually place it properly and actually get the profit target in your account with real money, not just a profit you see on the chart that you never actually made. You need to know how to actually place the trades properly, get them in quick enough not to miss the good opportunities. You absolutely don't want to make mistakes. None of us trades perfectly. I make mistakes on occasion too, and I've been trading forever. But you have to eliminate the bulk of the mistakes, because that alone can sometimes do you in. Nobody has a big enough edge in the market to make a lot of errors as you trade. You need to stick to the trade plans. I'm going to show you why that's so important. You have to understand drawdown. Nobody can win every single time. You're going to lose once or twice or 3 times in a row on occasion, and you need to be prepared for that, both psychologically and emotionally, but also your account needs to be prepared for it. So it's no big deal if you hit any kind of losing streak. And then you also want to have the ability, as your account grows, to be able to scale, meaning add to your positions. That is really essential, because what's the point, and I see this too much in Forex with a lot of these little robots where they can make money when you're trading $300, but anytime you try to scale them or put more money in your account, all of a sudden you start losing money. So that's pointless, right? We have to be able to scale to a full-time income. If you want to know the secret ingredient, maybe the whole recipe, this is the entire recipe, you just need a little bit of patience, in particular if you start with a smaller account. That's why we think the PTU works so well, because you can scale, you can do all these things I mentioned if you'll just have a little bit of patience to let that account grow and compound. So I've got this thing called, let's see, what is it? WIRWIT. So what you risk is what you trade. That's the formula. We always have something else we call WYSIWYT, which is what you see is what you trade, meaning everything with our systems you see on the chart is exactly what you're trying to replicate in your real-time account. So in this case, what I'm trying to tell you, it's all about the risk that you can take is going to determine exactly what you can trade. So the formula is very simple. The risk percentage you're willing to put up times your trading capital. That determines what you can trade. Nothing else. Too many people ask me, well, my broker on Forex gives me 50 to 1 or 100 to 1. He'll let me trade a standard or a mini for this size margin. My broker will let me trade a Russell Lee mini on a day trading margin of $1,500. So should I trade 3? Forget what your broker gives you permission to trade. All of your brokers, I don't care where you are in the world, you got more than enough leverage and margin. You don't need half to a third of what they're giving you. If you use it all, you will lose. You will never be able to make it. You need to approach it, forgetting what they'll give you, approach it this way. So let's give you some examples. If you have $5,000, which a lot of you are in that range or more, and you're willing to risk 2% on a trade, that tells you that your max risk on whatever market you choose to trade is going to be $100. If you're willing to be more aggressive and 3%, it's $150. If you're overly, really, I would say overly aggressive, 5%, you can go all the way up to $250. That's very, very aggressive, because if you lose just 3 times in a row, you will draw your account down 15%. When people start getting to double-digit drawdowns, usually psychologically, people get nervous. I kind of find the 20% drawdown over the years has been that freak-out moment for a lot of people. So, you know, we do everything we can, right, to try to avoid that. But I just want to kind of give you the range. Like I said in the beginning, you all determine where your comfort level is. If you start with a smaller account, you can kind of see the same multipliers gives you this 50 to 125 trade max risk. So you have to only focus on markets and trades that will lose you no more than 50 on the conservative side to 125 on the very aggressive side if your account is that size. And for a smallest account, let's say $1,000, you can risk anywhere from $20 to $50. And I realize the smaller the account, sometimes the more aggressive you have to be. If your account is larger, like those of you here at that 7,500, that 15,000, I wouldn't suggest you start with 5%, right? Try to get it down to that 2%. You'll find over time you'll get down below 1%. As your account grows, one of your goals should be bringing the risk down per trade as quickly as you can. It's great psychologically, and it's going to give you the staying power to make this a multi-year, multi-decade business, providing you income really forever as long as you start in the beginning responsibly. So with these ranges in mind, let's start with that 100 to 250 trade max risk. What can you trade? Well, the cool thing is, I told you before, one market, one contract, right? One trade. So I'm telling you right now, in futures, you can trade the Dow E-mini, the natural gas futures, the NASDAQ E-mini, the Euro Bund, for those of you, outside the U.S., or even the Euro stocks, S&P E-mini, the Euro FX futures, wheat, or soybeans. I'm not going to say that there's no other choices, but you only need one of these, and I've just given you, 7 or 8 or whatever it is here. And if you're at the very high end of the risk, crude oil or even heating oil, which is sometimes surprising to people, and I think TJ is going to show you this, we actually have a pretty low average risk on heating oil futures in a very, high performance market, which is blowing it out lately. So you can still produce and be profitable, and you've got a lot of choices, even in a fairly conservative range, $100 to $250 max risk. Now, Forex, you want to trade typically the mini contracts when you're in this risk range. If you start trading the standard pairs, you risk a large drawdown. But it's kind of neat on the day trading side, anywhere from 1 to 8 mini pairs. So that's pretty good. You can have some real activity. And those are the two, what we would say, if you're going to consider day trading, the only 2 markets to day trade, the Euro US or the Euro Yen. Now, swing trading, on the other hand, there's probably 20 different pairs that you can potentially trade. Try to stick to 1 to 2 pairs, because when you're swing trading, you're going to have larger pip risk, but you're also going for substantially bigger targets. I mean, 75, 100, 150 pips or more, sometimes trailers that go 700 pips. So that's the great side of it. The reward risk is awesome. You'll see that from Troy in a little bit here. But you need to bring down the size that you trade. And you can also trade options. Now, you don't want to day trade. You're not going to trade equities at all. At this level, these account sizes, you're not going to trade stock, but you absolutely can trade option contracts, typically about one contract, just so we know at times we could exceed the max risk up above, but also on an options contract, it's not unusual to make 100% or 75% or 150%. So it's a little different than the futures and Forex side. But look at all these options that you have available to you, and you only need one. Now, if you're in that 50 to 125 trade max risk, on futures, we would kind of focus you a bit more onto wheat, soybeans, or the Dow. And what's interesting, heating oil might actually work for you, and Troy's going to show you that at the higher end of this range. Bring down, if you're going to day trade, about 1 to 3, meaning instead of 1 to 8, 1 to 3. And if you're going to swing trade, start to be smart about size. Just trade one mini, or if you can, depending upon where you're located, there are brokers that will break it all the way down to micro. If you break it down to micro, you'll be able to take some of the scaling add-on trades, which get very exciting. Options we wouldn't do. At this risk level, this size, I would say that your focus should be futures and definitely Forex, an and/or. You're not going to be able to do both anyway. If you're at the smallest end of the scale, futures is not for you yet. You'll need to grow your account, and then you can start trading futures. But you absolutely can trade Forex. There's no reason you can't trade a mini pair or just bring it down into micros on the day trading side. But we would try to get you into swing trading anyway, and the way to do it is just trade micro size. It's going to be a little tough to have a $1,000 account and try to trade minis because you're going to experience some decent percentage drawdowns. It's better if you can break it down to the micro size. And then you've got, see the pairs that I list there? Some really cool, interesting pairs. There's a whole bunch more that you have that you can potentially access. So this will scale really nicely even if you start at the smallest possible level. You can still build, you won't believe it, but you can still build a full-time income, not get rich quick, not trying to turn $1,000 to $1 million, like you probably have an email in your inbox right now that promises you that. No, real business-like trading, you can actually still build to a full-time income, even at the lowest level. What's the secret ingredient that you guys need? Patience. If you have a little bit of patience, you can grow. I like to show this. We've showed this in other presentations. If you start small, and you know what, even if you're at the 15,000 plus, just limit your drawdowns because it gets harder and harder to recover. As you can see from this table, the more pressure you put on your account. It's not that difficult to have a 15% drawdown, and you only need 18% to get back to zero. When you're trading active like this, that's not that big of a gain. It's not going to happen in a day, and if it does, again, you're over-risking or over-leveraged, but it could absolutely happen. But if you draw down 40 or 50%, at 50%, you've got to double your money, and doubling your money is not the easiest thing to do, right, in a short amount of time if you're not using crazy risk. Well, that only gets you back to zero. So the secret here is keeping the drawdowns at a controllable amount, and that's why I say your risk determines what you can trade. If you'll stay within those confines, you'll avoid having large drawdowns. In particular with our systems, we don't typically rattle off just huge losing streaks, but we like to prepare you for that. If there's going to be a little bit of some choppy trade or a few losers in a row, I don't want you to be in a situation where you're down 30-40% after 3 losers and all of a sudden you got to make back 67% just to get back to zero. The real secret, if you guys can just be smart about this in the beginning, is you're going to have the power of amazing scaling and compounding. This is how difficult it is to actually double or triple your profits. Let's just kind of, sort of show this. You need an edge, you need consistency, you need to control your drawdowns, you have to have great trade plans that detail everything so you can just execute on those plans, follow it diligently, minimize your trading time. This is not about trading 10, 12 hours a day. I'd like you to be in and out as quickly as you can, eliminate those mistakes, and then add contracts and shares as things grow. Here's how you do it When you start with one contract, you can double your profits by literally moving over one space, one key on your keyboard. You've just doubled your profits, and now you've tripled your profits. So if you'll just allow your account to grow, there's no business in the world where you can double or triple your profit potential literally just moving your hand over, right, a half an inch or a couple centimeters. That's all it takes. This is what you need to constantly remind yourself when you get anxious and you try to push it too hard and you turn this into get rich quick. You don't want to do that because you're going to quickly go back to the one, or you're going to be sending your broker more money. If you just let your account build and scale, even starting with a small account, you'll be able to double and triple and so on as that account builds. We talk about this a lot, and I won't cover a lot this in detail here, but power of quitting is really essential. All I'm going to tell you is why would we use the word quit when it comes to trading? Because we have learned the sooner you can get out of the market on a day trade with your profits, the more likely you're going to build and compound your returns over time. So we do not make more money by working more hours. We make more money by growing our capital and scaling our position sizes up and only trading in the prime times, and that's it. Now we can scale, we can trail, there's a lot of extra things we can do, but that's one of the real secrets to consistent, profitable trading. So Troy, I'm going to have him come on right now and talk about his small account formula. So Troy, take it away.
All right, great, thanks. A lot of really important information, and the one thing to keep in mind is you got to stay business-like, because if you let yourself get involved too much as a human being, your emotions, you start making decisions that are not really part of the formula, and yet it's something we all do. So it's really important to find a way to solve that problem. These are some of, I got some techniques which I'll show you, but like what Mark said, number one is you got to aim for the small risk, because it's the small risk that's going to allow you to take the next trade and the next trade. And just think like a business person. Businesses need time to ramp up, all right? And if you think of that ramp, it stays pretty low to the ground at first. And over time, it so slowly elevates, but then it hits this point where the curve steepens and the ramp starts ascending faster and faster and faster. Okay, so always have that visualization in your head when you're making decisions. That's going to help you. Okay. Second, there's a guide to success, and that success guide is a step-by-step. Well, it's basically best practices is what I call it. It's how you actually handle your business and approach your business, and it starts with looking yourself in the mirror and becoming rock solid on the reason you're trading in the first place, so that you know what your goal is. Most people, hopefully, are trading to make money, okay? But you have to really take ownership of that concept, because what people confuse is this notion that, oh my goodness, I'm losing on this trade, I'm not making money. And all of a sudden, you know, the human emotion side kicks in and you start making decisions to try to solve that problem. But it's not a problem to solve, it's just a single business transaction. It's the overall edge that your trade plan is giving you over time. If you could just stay with it, that's where you're going to make money. Like Mark said, you're going to be able to scale up over time. So think of the ramp. Okay, you're not making money when you win on a trade, because you still have to take another trade. You're not losing money when you lose on a trade. All you're doing is conducting your business, and over time, the profits will grow and grow and grow until the point where that 2% becomes 2 positions, 2 contracts. How do you think each and every one of you will feel when you're able to put 10 contracts on a trade, and that only represents 2% or less of your trade capital? You're going to have a different feeling about that trade, aren't you? You're not going to feel so uncomfortable. You're going to have this big account. You're going to be putting on 10 contracts, and it still represents a tiny little piece of your overall trade capital. So think like that. Right now, you might be at the micro level. I'm personally incubating a tiny account with my 2 young kids, and they're learning. They're seeing it grow. They're seeing the power of what I'm telling you. Well, why don't you pretend you're a little kid and you're just learning this for the first time, and to see, a 100 pip trade only making 10 cents a pip. I mean, that's only $10, but to a little kid, $10 is a lot of money. It's the relationship to the available capital. I mean, if you only have $100, $10 is a 10% growth. So keep things in perspective. So the success guide is really important, but it starts with knowing why you're trading in the first place, and that's to make money, and that's a long-term proposition. You got to remember that, and that leads you to the commitment to the trade plan. So every day, remind yourself, hey, I'm trading to make money, and I've got some business transactions today. Some of them might not go perfect, some of them might go better than planned, but as long as I execute my business, I'm on the pathway to success, okay? But you have to be able to execute that trade plan too, so there's a level of practice that should go in. Mark talked about not making mistakes, and a lot of people overlook that. A lot of people forget that you actually have to physically execute the trades perfectly every time. And every type of trade plan has its unique challenges. Some trade plans, the day trades, I mean, you cannot take your eye off the chart. Some markets move quickly, and you can make profits really quickly. I mean, if you're doing wheat futures, you could be in and out and done in like a matter of minutes, except that if you answered the phone or turned your head and missed the trade, or you push long when you meant to go short. So you have to work out your mistakes in a sim account. This is part of the success guide. Prove it to yourself. Can you do 25 mistake-free trades in a row or not? There's something about that magic number 25. I mean, even for me as a musician, I've been playing drums my entire life. I still have to practice a new rhythm. I have to be able to play it 25 times in a row without a single mistake, or it doesn't become a part of me. I have to think about it too much. So you're not going to be able to execute the more advanced markets that are some of the best markets if you're still having to think about what comes next. But you don't have to think about what comes next if you just take the time to prepare, build your foundation, and work it out in a practice account first. Again, this is about being business-minded and treating this like a business and exercising best practices, especially if you have a small account, because you don't have a lot to lose. You've got to be correct. You've got to be able to execute that trade plan perfectly. And you know what? Even if you have a larger account, because if you don't do this, you're soon going to be one of the guys trying to do this with a smaller account. Okay, so it's really, really important.
Great, Troy. No, I think those are awesome points. I want to kind of start to give us the opportunity to get to the charts here a little bit and show us or show them a little bit what markets they can actually start with in futures and in Forex. So this is just a bit of a report card on the PTU2 since the last class. What's interesting here, and Troy will be showing you some of this as well, a few of the markets that we talked about, like the Eurobond, the $2,500 on just one contract over that time, that works out to be somewhere around $40-something per day. Natural gas is in about that $40 per day. Soybeans in that $40-ish per day. The Dow E-mini, the same thing. So I'm going to show you that a little bit. On Forex, you can see, which is down a little bit below, it's even higher, but this is based upon a standard size, so we would have to scale some of that down, but you can see that there's lots of profit available to you, even starting with that one contract type approach over some time. And then on the option side, those of you in the stock and options, typically most of the trades on the profitable side anyway can go 50 to 200%, but obviously you've got a little higher risk because your options premium can come down. And this is all based upon just approach, following everything 100% mechanical before the benefit of what we teach you in the undergraduate and major training. So I want to show you something before I jump into the chart. This is going to go into what Troy was just talking about. And some of you have seen this before if you've been on some of our past webinars, but we want to kind of prove the point. And let's just start with the starting capital of $5,000. And we'll assume just $50 a day. There's, or we'll even assume $45 a day. And we'll, Troy said, how will you feel when you get to 10 contracts? So we'll say that's the maximum number that we can trade. And then we put in, what is the the maximum risk per trade, let's put in $130, depending upon which market we choose, and we'll say we're going to be at that 2%, make it a 2.5% risk. And then some of these other numbers you have to understand over time is just based upon how much money we're going to start to withdraw, because we're big believers if you're actively trading, yes, you should be building your account, but you also should be paying yourself for the effort as soon as you can. So down below, based upon these assumptions, I've got monthly expenses of $150. So I got to cover my data, my internet service, any supplies. I'm not exactly sure what those are, but who knows? Maybe you've got to pay for the stapler or something else. So it's $150 a month. And originally, first month, we start at one contract, and we make $900 based upon the above, $45 a day. This isn't about get rich quick. This is about doing it slowly and smartly. And we got some expenses, so we end up netting $750. So it's going to take a little bit of time for this account to grow. But remember, I started with $5,000 in the first year. By the end of the year, I'm up to $18,500, right? As you can see here. I've literally, what have I done to my account? Almost quadrupled it. But I've told the spreadsheet, don't take any money out until I get to $20,000, because I've decided, at least in this assumption, that the best thing for me in that first year is to get up to multiple contracts as quickly as possible. Because what's going to start happening when I get above 20,000 is I'm going to start being able to take out money out of my account. This would be year 2. It starts small, but my account's now 5 times the size, and I'm starting to take out money each month. Literally in that second year, by the end of the year, I'm taking out $4,000 a month. I realize that may not be enough yet for you for a full-time income, but look how much money is in your account at this point, $64,000. We started with $5,000. We're literally up to that 10 contracts that Troy was talking about. I only started with $45 a day risk, right? You can start small. What do you need? What did I say and what did Troy say? Patience. If you can just, I always say, if you can just get through the first 6 months, you're going to make it. And look at this as it builds over a few years. In fact, go all the way to the end here. You've taken out $300,000 into your pocket. Your account's at $105,000, which is more than enough to trade those 10 contracts, right? We don't want to leave extra money in there. We've paid ourselves $300,000, and we've made over time $400,000, but we started with $5,000, and we made just a very, very achievable $45 a day. It doesn't matter if you start with $3,000, right? You're going to need to have a little less risk on the trade to kind of keep that max risk in line. But even in that assumption, right, maybe, I'm not going to make 45 a day. Maybe it's 35, or let's even go down to 30. Look at the bottom line numbers. I still was able to build up to a full-time income. I still have a huge account. Started at $3,000. I ended up making $272,000. I took out almost $200,000, and I've got $75,000 in my account. This is just starting small and building. Any of you guys with the larger accounts, you somehow built your account anyway, whether you just put the capital in from work or somewhere else. So just remember that as we show you the chart. So I want to give you a quick demo here of the PTU2 and show you how this can be done, and then hand it off to Troy so he can show you how it can be done using the PTU Trend Jumper as well. So this is natural gas futures. This is from this week. So again, this isn't trying to pick the best case scenarios for you. This is going to be a normal week for you. So on Monday we came in, and I don't have a lot of time to explain every detail of the trading system other than to say you'll be taught all of this in the training, and it's very simple strategy to learn. A big piece of it is this indicator down below. Anytime the indicator's red, the trend power we call it, we'll look to short. When it's green, we'll look to buy. But we won't automatically buy and automatically short just because it matches the color. But it is the first thing that tells us that we can trade that direction. So when it turned red here after the opening, and again, we only trade the prime time hours. I don't try to trade this 24 hours a day, even if it's open 24 hours a day. I want to be in and out in minutes if I can. So on last Monday, we got a short, and this is the exact, like I told you, that recipe. Everything's exact on the screen. Exact entry, 3.308. Exact target 2, 3.288. An exact initial stop. This first trade of the week, we actually ended up losing on this trade. So how much did I lose on this one? From 3.308 to 3.326 was 18 ticks. So on this one it was $180. Remember we said this is easily in that range that first range of the $5,000, no problem. That was your max risk. That's not even going to be your average. Your average will be lower because we have money management, we have partials. But in this case, on Monday, we lost that. We come back on Tuesday, starting at the same time, and the trend power turns green. We also have to have our bars trading above our exponential moving averages, and we use some very special bars. These are actually called momentum bars, or they're called range bars. This is a really unique way of looking at the market that most people don't do, but it gets us in on these swings really quick. We need some confirmation before we jump in again, right? I don't just mark it in. That's not responsible. If the market gets choppy, you're going to lose money, a lot of money. We don't trade that way. We're looking for very definable high odds of percent to succeed. So when this trade actually goes long here, again, I have my long entry at 3.269 and my target 2 at 3.289. That's 20 ticks basically. Think about it like 20 pips if you're a Forex trader. I make $200 on that winning trade. And how long did it take me? I got in at, in this case, let's see what time I got in. I got in at 9:36 and I was out at 10:09. So, about a half an hour and I'm done on the day. Remember power of quitting that we showed you? We do it again on Wednesday. The same situation, in and to full target, it's another $200. On Thursday, same thing, short, target, another $200. And then finally on Friday, which there's a lot of action there, obviously a big long chart, we start with a loser and we come right back with a winner. So on the loser, right, we lost $180 and then we ended up making back the $200. So on the week, just to kind of show you, we'll just bring up the total here real quick, we made $440. We had 4 winners and 2 losses, 67%. 440 divided by 5 is what? That's $88 per day. Now, I'm not saying that it's always going to be the average on natural gas, but on this one, it turned out to be, double the average that I was saying that we even need. Soybeans, like a lot of people don't even think about trading a market like soybeans, of all things, right? Works great. Here's a trade on January 31st. This would have been on Wednesday. And actually, I'll go back real quick just to sort of show you the week really fast. Everything on our charts is always crystal clear. So the 28th was Monday, so let's go back. All right, so here we are on Monday. We have a long entry at 1443.75, and my target's 1448.25. So we're basically, in this case, we're going to be going, let's just do the math, 1448.25 is our target, minus 1443.75. So the target is going to be 4.50 points. 4.50, it's $50 a point. So that's going to end up being $225 for a winning trade. So I entered this trade, in this case at 9:35 my time, and I was out literally in a couple minutes to full target. It was a fast move on that one. But it's set up in advance. I placed the trade 3 minutes before it triggered. I had plenty of time. I need 5 seconds to place a trade. I had 3 minutes to get this in, and then boom, off to full target in about 2 minutes. $225, one contract, one trade at a time, right? I'm done for the day, by the way. I'm not going to stay in that market. I don't need to force it. We come back on Tuesday, we do it again. But this time we do it on the short side. Trend power turns red. We need to pull back into our moving averages. We need to bust out of the moving averages using these special range bars. Another $225. So now we're up $450, right, on the week. Now, not everything's going to go perfect. There's got to be losers sometimes. But Wednesday comes back and gives us another winner, another $225. Thursday comes around, and we get another winner, $225. But now reality hits a little bit, right? We've had 4 winners in a row. We're up big time, and we catch some chop. In the market on Friday, it chopped around early. So on this trade, 1480.25, we end up stopping out at 1484. So that's less than we were risking. I believe it's we lose maybe 175 on that loss, and we lose again on the second trade of the day. Remember, though, you're inside that max loss that we calculated, $250, so we're fine. And we come back with a third trade where we bring back on $225. So we go 1 for 2 on Friday after winning 4 in a row. On the week, we end up with $775. That's an average of $155 a day. We're not going to average $155 a day on soybeans, but it just shows you that there will be weeks, literally, that this, on a $5,000 account, you made 15%. So I'm not saying you can't make a stellar return. in some weeks, but we need to prepare for some of the weeks where maybe we see more of this. That's the whole idea behind this formula and approaching this, like Troy was saying, you know, almost as a little kid. I mean, don't get too taken in by the upsides. Trade it responsibly, and you'll do amazing. The Euro FX futures, I know I don't have a lot of time here, so I want to hand it off to Troy. Another great market to trade if you want to trade futures on Forex and not the spot currency. I want to show you a trade here real quick. Actually, maybe I don't have my, oh, there it is. Okay, so here's like a short trade. This was actually a trade on Friday. You know, a short trade goes down to full target. Those of you who like Forex, you may really love the Forex futures because it's just one centralized exchange. There's no fixed spreads. There's a lot of really neat things about it. And a trade like this that goes to full target ends up picking up $237.50 and is very, very steady over time. You know, losing week here, but week after week of consistent profits. Slow week this week. We didn't have a lot of trades, but still profitable on the week. You prefer Forex? That's fine too. You know, here's the Euro US dollar, just the last few days. This is what we call more of a swing trade. You know, you can see these trades actually go for, just to kind of give you an idea, it's not a scalp. We're looking for 50 pips from entry to target, from entry to target, 50 pips each time. So I'm not asking you to try to day trade for 5 or 7 or 10 pips. I'm looking for 50 pips at a shot. And you can see we can get really hot on the upside. The trade we're in now, coming kind of close to a stop, but we just ripped off 4 or 5 winners in a row. And this can be traded with micros or minis, you know, whatever scales to your position size. So Troy, let me hand it off to you because I don't want to, I know we're running a little bit over here on time, so let me give you a chance to show us some of your examples. And as soon as I do this, okay, should be you, Troy.
All right, great, thanks. Let me just grab the screen here. Okay, that should do it. Let me know when you can see it.
Yeah, you're good.
Okay, good. So, you know, remember how we're talking about trade plans and knowing exact entries, targets, and stops. And Mark, you know, he's showing you, doesn't matter even what market, you could even cover up the symbol. It's about risk, and it's about diligence and making it business-like best practices. Trend Jumper's the same way. You have exact entries. Like, let's take this last trade. It just hit the target. I mean, it zoomed to target just yesterday. And I put these lines here because this is also pretty important. I want to show you some risk versus reward. But right here, this little plus sign, you always know where your entry is because there's a plus sign that shows you. As long as it's above the dotted green line, you always know you're going to go long. If it's below the dotted green line, you go short. Then you got some targets up here, and you got the stop right here at this dot. And then if you just click on the bar, you know exactly what the trade is because it shows up right here in the data window. There's no guessing, so it's pretty easy to follow a plan when all you have to do is click on the bar, and it's like that with what Mark showed you too, right? You just click on the bar, and you know where you're getting in, where you're getting out. With Trend Jumper, your risk, now, boy, before I even tell you that, I'm not even looking at the symbol. What symbol is this? Oh, gee, it's a Forex chart. It could be heating oil. It could be anything. It doesn't matter to me as long as my risk is the way it needs to be, right? And I'm making the point because so many of you are just married to one market or another, and it's kind of silly. You know, if you're trading to make money, go where the money is. It doesn't matter the symbol. What matters is what you're capable of trading, staying within the risk formula that Mark was explaining to you. Now with Trend Jumper, I like to use end-of-day charts with Forex because it's so simple. I get to look at my charts once a day at the end of the day, think through my trades, place my trades, and then walk away until tomorrow. And I know that every single setup, I'm risking this small amount here between the blue and the red line to potentially make double. Okay, and that's just going to the fixed target. I like to take these with 2 positions because look over here to the left. What happens over here, I get to get out at this fixed target, but I could trail the second half of my position even higher. And it could get really dramatic with the gains. One thing about this is that you could, you know, trade larger size trades if you just keep that risk small. That's what I love about Forex. I don't mind putting on a micro or a few micros. It doesn't matter. because I know a year down the road I'll be still putting on the same percentage of risk, only it's going to be on a larger account. Okay, so that's the thing to really keep in mind. So I like to look at a lot of pairs because I'm trading end-of-day charts. I have time to think through each and every one, and I can get diversification. You never know which market's going to get hot. For sure, 1 to 3 times a year, you're going to get these big explosive moves like we've been seeing in these yen crosses. And again, you can see trailers. Trend Jumper is going to give you opportunities to even add to your position, and each one of these trades can be treated independently with that really nice 2-to-1 risk-reward ratio. You can see another target being hit just yesterday here too. The yen's just been on fire. But it's not the only one. I mean, the Euro-US was kind of sleeping through 2012, starting to come alive again. I mean, some nice winners here. This one just barely missed its target, but I don't need to worry. I don't care if this goes to its target. I don't care where it stops out because it's just another business transaction. As long as I follow my plan, it's going to continue to grow and grow and grow. My stop is moving up. I've got a risk-free trade. So let me just show you this, Mark. I don't remember if you have a slide, but these are some of the results that I'm a little behind in updating them, but this is what happened last year with this exact same approach. Okay, and again, it's going up. Each one of these has been growing. Some of them have gone down a tiny bit, and that'll happen, but it's an ebb and flow process. So if you're just starting out with a tiny account and you're trading micros and you were able to pick up 2,000 and 160 pips, say, on the pound dollar, I mean, you just grew your account over $210, right? About $216 if it's a 10 cents a pip. That may not sound like a lot, but add that up over all of these. And all of a sudden your account is growing and your one micro lot is turning into multiple micro lots and you're building it up to one mini lot. And if you just continue following that pathway, well, Mark showed you that spreadsheet on how quickly your account can grow. So it's a matter of structure, knowing exactly where to get in and get out. So you have your trade plan, your trade system. That's what winning trading is all about. And you don't have to do it all tomorrow. It's just a matter of being consistent and trading profitably. I want to show you one more example. Mark, do I have time to show one more thing before I pass it off?
Yeah, go for it.
Okay, so when I talk about treating my trading like a business, I'm tracking all my trades, okay? I'm tracking all of them in this log here, and I'm building a win-loss column so that I could actually see what I'm doing. And this was back when the euro was hot day trading, second half of 2011. We were doing this every day in the live trade room, and I tracked every trade, and I treated it as if it were a micro account, 10 cents a pip, okay, with $1,000 starting. And I went ahead and ran the numbers. What would have happened if I just could have stayed with that from the end of July up through middle of December, say, risking 3%. I have to be a little more aggressive with only $1,000. And I went ahead and ran a study with this amazing tool here that I use. And here you could see the comparison that if you just stayed with one micro lot, you would have grown $1,000 to $1,280. I mean, that's pretty good. It's over 12%. If you can make 12% a year, you've got a career on Wall Street, right? Well, this was done in, 5 months or so. So look what happens, though, when you stick to that 3% formula and take the identical trades. This is starting with micros. You grew it up to 6.5 basically full-size contracts in a matter of months just by sticking with 3% risk. And it's because it was a rock-solid formula, a really effective trade plan, and it had a nice winning percentage, and I was risking 3%. Just to illustrate the ramp, and what I mean by ramping up your business, this is the equity curve based on putting on 3%. The numbers are over here on the right. See the ramp? Look at how it ramps up little by little. Now imagine your business. You need all this time to build momentum up in your business. It starts to go up a little, and it's not a straight line. It's going up and down till finally, right at the end, look at where all the money was made. That's when you hit that curve, right? And another great illustration is this one, because this histogram shows you the number of contracts, the number of micros turning into minis. Look how it ramps up until finally it gets all the way up to it got as high as over 700 micros. Well, that's equal to 7 full-size lots. 7 full-size lots on the Euro US is not that much. But the illustration here is the ramp, and it took time. And if time should be irrelevant to you if you're in this to make money. If it takes you 5 years to build this way up and to see this ramp up, I mean, that's a good thing, isn't it? 5 years to build a successful business. I mean, how long does it take to build a successful business no matter what field you're in? Probably that long, right? So keep it in perspective. Best business practices, be patient, like Mark says, and you can experience this too. But you got to show up every day, you got to take the trades, and you got to stick to your plan and exercise those best practices. And you could start with a small account. Back to you, Mark.
Thanks, Troy. Awesome. So, I mean, I think certainly the key there, and I know we've said it several times, is patience. That first 6 months is so pivotal, especially if you are starting with a smaller account. But even if you're starting with a larger account, we always tell people with larger accounts, trade the smallest increment you can. 1, to get through that learning curve, and 2, to give your profits should be what's sort of propelling you to trade bigger contract sizes. That curve that Troy just showed you wasn't somebody coming in and putting more outside capital in, or raising money, or borrowing from somebody. It was just spending the profits and putting the profits towards the business and increasing the position size, and by the way, not working any harder. Because as Troy showed you, that those ramp ups, it doesn't take additional work to trade bigger position size. It just doesn't. You just have to, the work comes from getting permission to grow those accounts. So what we think is a great way to do this is through the Premier Trader University, and we have a brand new class that you guys can be involved in. And I want to just sort of give you the quick information here. The whole idea behind the Premier Trader University is to teach you everything we've shown you today, but actually be able to execute upon all this, giving you the exact systems, the trade plans, the indicators, the support, so you can actually build that full-time, or if you're looking for part-time income or retirement income, whatever your objectives are, giving you the training and the systems to get you to that objective. And the way that it works is 3 steps. Prerequisites, which start immediately. Undergraduate education, which is where you learn all of the systems that we showed you, and you start to trade live. And then the major, just like at a university, is where you specialize. Perhaps you're going to specialize early on in Forex or futures or options. We think you should specialize in one and then look to add to that later on. Remember, all it takes is one trade, right? One market. That's it to be successful. So what are the prerequisites? This is something that if you enroll in the university, you'll start with right away. It's home study, so you can start at your leisure. That's one of the best ways to learn. And we try to cover everything so you'll have the foundation you need, and maybe in many ways break some bad habits in order to be successful with the undergraduate when you really start to learn the systems and then go live. So pros and cons of style of trading, day trading, swing trading, markets, Forex versus futures versus options. Brokers and platforms are hugely important. Learning how to work with those properly. I mean, this is like if you're opening a store. It's your real estate. It's everything that you have, and it can be a difference maker. Technical analysis, we are technical traders. We don't try to understand or interpret the fundamentals. We know the fundamentals move our markets, but who wants to be in the game of guessing? Because that's all it is. Fundamental analysis is guessing. Technical analysis is not about being 100% right. It never is. But it's about putting odds in our favor. But we'll literally parse out 90% of what people teach, and we focus on the 10% that actually can help people be profitable and make money. Risk management and trade psychology, 2 really important elements, are covered in detail in step 1. Developing the exact market trade plans. Essential, right? We're showing you plans on the Dow E-mini, heating oil, Euro FX futures, the pound yen, the Aussie yen, etc. You need to know that every market's a little bit different, so we kind of show you how that's done. Then you move into the undergraduate. This is where it all happens. This is where you actually learn again, in the comfort of your home or office, but you learn and master the strategies. I've already shown you on PTU2, and Troy showed you on Trend Jumper. Everything is very visual. We never go into a trade without knowing our exact entry, exit, and stop, and knowing the odds in our favor, and knowing in the past we've had productive, positive returns. All of this is taught in the undergraduate, along with trade management and some of the art of trading, because art of trading is actually going to make you from 10% to 50% more money, and I'm going to show you what I mean by that in a moment. Choosing the best market to start with, your risk profile, your trade psychology, executing the trades live. As soon as you finish the undergraduate, you should be able to start trading the system. Now what you do after that is you start to focus more specifically on futures, Forex, or stock and options. And this is where we get a little bit more intensive, because there are differences the way futures trades, the way Forex trades, the way stock and options trade. So we can get more advanced. We can talk about very specific things that affect these markets, and this is where we start to add to your profits and add to your return potential and help you eliminate some of your drawdowns and some of your losses. So it's just a 3-step plan. I like to think of things that way. Step 1, step 2, step 3. I do one at a time. As I come out on the other end, I have everything I need. I'm fully empowered to be a full-time or a part-time active trader. That's the whole design of this curriculum, whether it's futures, Forex, stock and options, various different markets you can trade depending upon your account size, your risk capital like we talked about today. These are all the things that you can do with the university. You can trade just like us. And I should say on the majors, you don't need to decide and think, oh, if I pick futures, I'll never be able to do Forex. You have access to all 3 majors in time when you're ready. As your account gets large, you're going to need the opportunity to start scaling it up. You may not start with stock and options, but you know what? Even the day traders on futures are eventually going to want to be able to swing trade Forex or swing trade options, because you're going to want to start to deploy your capital other places. Diversification, as well as just making sure that, if you're trading too many contracts, you may reach a size where you can't even execute on that size anymore. You'll have to scale it down sometimes a little bit. That's a good thing. That's a great place to be, where you add on additional markets and just start to look at some different opportunities. You remember I mentioned what training can do? If we looked at some samples in the PTU system, and then we went ahead and said, with training, what I teach you in the undergrad and the majors, what the entire staff teaches you, look at the increase in profits just by using the art of trading that we teach, 32 to 84%. Now sometimes it's 10 or 15%, sometimes it's up to 84%, but it's always a bump in profits overall. And by the way, no additional work, no additional effort, just using education. There's nothing more valuable in trading than actually learning from people who do it and learning the little nuances and many times little secrets that we've learned through the School of Hard Knocks that make a difference in our bottom line returns. We've shown you this just a little bit ago, the amount of profit potential that's there if you'll let it build over time. Look at the columns from trade plan, which is 1 contract, 2 contracts, to 3 contracts. This is the whole idea behind starting small, responsibly. Like Troy mentioned it, I mentioned it. We really want to convince you that you do not have to start with a huge account if you'll just give it that 6 months, that period of time, to start to have that compounding go into effect. Like I showed you on the spreadsheet, and Troy really showed you great visually on his worksheets there, what starts to happen when you get into the ramp process of your return. Again, on this heating oil, 9,400, to do 28,000 from 1 to 3 contracts, no additional work. The work came from building your account to give you the permission to trade that market and to be able to do 2 and then 3 contracts. Troy showed you some of this already, some of his Forex swing trading results from 2012. They keep bumping up in 2013. So this is a great choice no matter what account size you have, because you can trade down to minis and down into micros. So you don't have to be intimidated anymore by that situation. You actually can just use the size of your trade to be able to literally give you permission to trade all these. And then just realize $10 here, $200 here, $50 here, it will enable you and give you permission to grow that account, and you'll eventually get into